Welcome to Drill Down Earnings. We have quarterly results from CrowdStrike. This is their second quarter since reporting that really big screw up that shut down the internet for a lot of people. This is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. When we look at CrowdStrike, we can look deeper than Wall Street's beat or miss, although this was a beat. $1 billion quarter for the first time for this company. And the revenue growth stayed strong at 29%. But let's dig a little bit deeper here. So yes, $1 billion in revenues, quarterly revenues, $4 billion in annual recurring revenues, first time ever for this company, and that number is growing really strongly. Cash flow from operations and free cash flow is pretty good, although they warned us they don't really know what's going to happen next quarter as a result of that. The guidance was good. They raised their guidance. Don't get me wrong. They raised their guidance to 3.925 midpoint of their guidance for the fiscal year. Analysts are expecting $3.9 billion. So it's a little better, I guess. But they did warn that the visibility is limited. They really don't understand what their customers are going to do because of the problems and the reputation damage they got on July 19. When they had this July 19 problem, when they crashed so much of the internet with a faulty software update that hit Windows-based devices across the Microsoft ecosystem. It's a complicated deal that happened, but they basically changed something that customers couldn't really fix easily without a lot of effort. And how much effort? How bad was it? Well, we don't really know. We know Delta Airlines sued CrowdStrike for $500 million in direct losses from the incident. CrowdStrike defending itself, saying that they called it Delta's failure to update its antiquated IT infrastructure in a lawsuit. That's not good. You're fighting with your customers. But fundamentally what we saw from these guys is, the revenue growth was strong. Their losses came back. So they had much higher expenses, particularly in the sales department, that caused them to return to losses after just cracking profitability about a year ago. And if you looked a little bit deeper, there were some numbers that were really good and some numbers that were really bad. So let's talk about the good numbers first, because I'm an optimistic person. They give us numbers on the customers that buy more than one module. They sell lots of different modules in a total system that they dub Falcon this and Falcon that. But fundamentally, the number of modules they sell to a given customer is the opportunity to raise revenues of that customer. So they talked about they've got well over 60% of their customers now buying more than 5 modules. They've got well over 40% buying 6 modules, and 7 modules, 31% of the customers, the most ever buying 7 modules. And those best customers are the ones that are growing fastest. So I track this in my model, not just the percentage of the modules, the big module users, if you will, but how much that percentage is growing. And it's growing among the best customers. So they're expanding, that suggests to us, they're expanding their average revenues per customer, and that's a good thing. So that's the good number. Here's the bad number. The net new annual revenue growth. So when they talk about annual revenues from a customer for a year, right? That they expect, those numbers have grown. They've grown to 28%, and that's really nice. The recurring revenues from any given set of customers. But the net new annual recurring revenues was way down on a year-over-year basis, down negative 31%. That number was not great last quarter. It was dipping, but wow, did it take a nosedive. So what's happening here, and how much of it is July 19? We're going to find out. When the numbers came out from the company, the stock sold off a little bit. I think the guidance helped. And again, some of the positive metrics were certainly positive. You had to dig a little bit deeper to find the net new ARR numbers that were problematic. And the stock is up 73% this year, despite crashing the internet. I mean, my goodness, the stock is up well over 100% from where it was not too long ago, 2 years ago, and is moving really strong since that July crash. But George Kurtz, co-founder and CEO, was asked about what customers are saying about the July 19 outage, how much they're going to owe customers, and is that having an effect on net new ARR?
I spend a lot of my time with the larger customers and really haven't had a lot of conversations around churn. And the conversations that I have had have been a recognition that we do have the best technology in the market, and a recognition of how we handle the July 19th outage. And I think that's, an area where we turn crisis into a customer trust building opportunity. And we're trying to make it right for customers. So from my perspective, I certainly haven't seen a lot in the larger to mid-size deals. In fact, our corporate business, as I called out, had the best quarter ever. So from a churn perspective, you could see some churn in the very small MSP space. It's an area where it really doesn't matter the vendor. It's easy to kind of move in and out. But I'm encouraged by the conversations that I'm having with our largest customers and a reflection on the fact that they realize that we have the best tech in the industry and the ability to stop breaches and drive down their overall operational costs from a platform perspective.
So you can hear the hesitancy to be terribly bullish on this thing, even though we're more than a full quarter away from when this incident happened. I'll tell you, when I was visiting with a competitor recently, the competitor liked to boast that this was the company that crashed the internet, and they like competing with companies like that. We shall see. So here's your essential summary of CrowdStrike earnings for the third quarter. $1 billion in revenues, that's good. 29% revenue growth. It's less than before, but still pretty good. But in light of the crash of the internet in July 19, customers are nervous. Their discussions with customers are taking longer, so is closing deals. So that while they raise the guidance, they express some concerns. They don't really know what's going to happen in the next quarter or so. All right, one number, what tells us a whole lot though, to drill on bytes, 20% of their customers bought 8 modules or more from this business. We've never heard about this before from CrowdStrike. That is a positive sign for this company, and that bodes well for the future, even if the past of July 19 does not. All right, thanks for checking out Drill Down Earnings. Subscribe. See some more. I'm Cory Johnson.